What's been so unique about this bull market, one of many things that have been unique, is it's been the other way around. The metal has been dragging the miners reluctantly. There has been no enthusiasm in the investors. They're not anticipating higher gold prices. They're worried that we're going to get lower gold prices. And so they don't want to buy the stocks. They're nervous about buying the gold stocks. Well, now they're a little bit less nervous because the gold stocks finally broke out to new highs, even without the price of gold itself breaking out to new highs. So now the gold stock investors are anticipating a breakout. And I think they finally got it right. I expect the price of gold to hit a new all-time record high next week. And I think we're going to keep moving up.
Historically, when the Fed cuts rates, gold stocks have outperformed the gold price by 10% for the first 100 days and 27% for the first 300 days after the announcement. So, if history repeats, a shift into gold stocks or the VanEck Gold Miners ETF could prove a savvy move. Or if the central bank buying continues, you could bet on a further rise in the price of metal and go with the abrdn Physical Gold Shares ETF. Renowned financial commentator Peter Schiff is the CEO and chief global strategist of Euro-Pacific Capital Incorporated. According to Peter Schiff, the mining stocks performed impressively last week. He predicts that gold will hit a new record high next week and continue its upward momentum. Safe haven assets like gold will likely benefit from the increase in market volatility and perceived risk in the wake of the Saturday afternoon assassination attempt on presidential candidate Donald Trump. In contrast, the increased odds of a Trump victory in November could weaken the dollar and boost the yellow metal, according to numerous market participants. From a technical perspective, Schiff believes this is significant because gold stocks are leading the metal for the first time in years. He predicts this signals a new trend where investors recognize the ongoing bull market in gold. Regarding the market, Schiff acknowledges it is on the brink of collapse and Bitcoin will plummet. Moreover, he expresses that now is the time to exchange Bitcoin for real gold and silver, noting that silver is still under $32 an ounce. Gold has outperformed cryptocurrencies over the past 2 years, particularly due to the bear market that affected Bitcoin and other digital assets throughout 2022. Now, we present the clips of Peter Schiff's insights from his recent video. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The stars were the mining stocks. Again, had a great week last week, strong week. Gold up 1.5%, closed above 2,400 at 2,410. Didn't make a new all-time record high. We closed, maybe got about $20 away from a new record high gold price. Silver backed off a bit. It was down about 1%. But remember, it was up like 6% last week. So it had a little bit of a pullback. But the mining stocks were very strong, even though they were down slightly on Friday. The GDX was up 6% on the week. The GDXJ was up 6.2%. And unlike gold, these indexes hit 52-week highs not only on Friday, they hit 52-week highs on Thursday. So for a long time, the gold stocks have been lagging the metal. This is the first time in years that the gold stocks are leading the metal. And I think this is the beginning of a new trend. I think the gold stock investors are finally starting to wake up to the reality that this bull market in gold is real and that it's got a long way to go. Because normally during a bull market, this is typical. The stocks normally lead the metal. What's been so unique about this bull market, one of many things that have been unique, is it's been the other way around. The metal has been dragging the miners reluctantly, right? There has been no enthusiasm in the investors. They're not anticipating higher gold prices. They're worried that we're going to get lower gold prices. And so they don't want to buy the stocks. They're nervous about buying the gold stocks. Well, now they're a little bit less nervous because the gold stocks finally broke out to new highs, even without the price of gold itself breaking out to new highs. So now the gold stock investors are anticipating a breakout. And I think they finally got it right. I expect the price of gold to hit a new all-time record high next week. And I think we're going to keep moving up. Also, the dollar is breaking down just as gold is breaking out. Dollar index closed, I think, 103.75. Had a lot of weakness against the Japanese yen this week. There was some Bank of Japan intervention, although this time it actually succeeded in driving the dollar down. But the euro closed the week above 109. This is the highest it's been, I think, in several months, maybe since April. My restaurants might be a little bit more expensive now because the euro's going up. But to me, this makes sense that these things are happening together, that the dollar is rolling over and about to break down, just as gold is about to break out. One thing that is not breaking out, not following real gold, is fool's gold. Bitcoin had really a non-event during the week. I think the Bitcoin ETFs managed to eke out a 0.8% gain on the week. Bitcoin's about 58,750. So really not participating in the rally that you're seeing in precious metals. I still think that we're getting ready for another big decline. So before that happens, it's not too late to get rid of your fool's gold and get some real gold, get some silver. Silver's still below $32 an ounce. Schiff Gold, we were one of the first companies to start working with BitPay. So you can go to Schiff Gold, go on our website, and you can use your Bitcoin to the extent that my audience still has any Bitcoin. But if you do, this is a great time before the bottom drops out of Bitcoin and gold goes through the roof to use the Bitcoin and convert them into gold, convert them into silver. And again, the mining stocks, they're just starting to move. They've got such a long way to go. Look at a chart of these mining stocks. Look at a 5-year, 10-year, 20-year chart to really appreciate just how cheap these stocks are, and that they're really just starting to move. If we're really just starting this bull market, because we're finally, after all these years, we're leading the gold price higher, then this is going to be a massive move up, and you really want to get exposure to the sector.
Peter Schiff notes that Powell's recent response regarding inflation targeting underscores the Fed's prioritization of maintaining higher inflation rather than balancing it below 2%. Concurrently, Schiff remains critical of the Fed's approach, suggesting it favors policies that perpetuate inflation rather than aiming to stabilize it below the targeted threshold. Speaking at the Economic Club of Washington, D.C., Powell referenced the idea that central bank policy works with long and variable lags to explain why the Fed wouldn't wait for its target to be hit. Federal Reserve Chair Jerome Powell said on Monday the 3 U.S. inflation readings over the second quarter of this year do add somewhat to confidence that the pace of price increases is returning to the Fed's target sustainably. Remarks that suggest a turn to interest rate cuts may not be far off. According to Schiff, Powell focuses on the PCE index, which typically shows lower inflation than the CPI, as it is less accurate and more favorable for the Fed's narrative. Let's get back to the interview.
I forget which congressman asked the question, but he said, when inflation was below 2% and it just moved above 2%, you said that your goal was average inflation rate of 2%. And so the Fed was going to target an inflation rate a little bit above 2% so that we could average the rate back down to 2% because we had so many years of 1.5, 1.75. So we needed a little bit higher than 2% to get an average. Remember, at the time when the Fed first announced this inflation averaging, I said it was all BS, that they didn't really want an average rate. They were just making an excuse to keep interest rates lower and to allow additional inflation. I always said that eventually inflation is going to be above 2% and they're going to give up that goal because they're never going to try to run sub 2% inflation to average down high inflation the way they wanted to average up low inflation. So this congressman finally asked Powell, said, hey, whatever, you said that you wanted average inflation of 2%. Well, we've had inflation well above 2% for years now. So does that mean you're going to target a rate slightly below 2% so that we can get the average down? And of course, it wouldn't have to be slightly below. We're so much further above 2% than we ever were below it. All the years where the Fed claimed, God, we just don't have enough inflation. We need 0% interest rates. We need quantitative easing because we need more inflation. It was barely below 2%. Of course, it was never below 2% because they weren't measuring it accurately. It was always above 2%. Every year they pretended that it was below, and they used that as justification to create more inflation. But now when we're at 6, 7, 8, 9%, we're miles above 2%. So in order to actually get the average down to 2%, we can't have 1.9, 1.8. We need inflation closer to zero. Maybe we need some deflation. We need falling prices a few years. It's going to take a lot of work to average what we've just experienced back down to 2%. And we're still getting inflation well above 2%. So he asked the question, does this mean that you have to target inflation below 2% so that we can get the average? And he had a one-word answer. He said, no. He was very emphatic, no. And that was it. Now, I really wish there was a follow-up. I wanted him to say, well, why? Why was it that we needed to average up low inflation, but we don't have to average down high inflation? I would love to hear Powell try to answer that question, because according to Powell, basically, low inflation is a bigger problem than high inflation, because if inflation is too low, we need to average it up. But if it's too high, we never need to average it down, right? It doesn't matter how many years inflation is way above 2%. We're never going to get inflation below 2% to make up for it. We're stuck with all that high inflation. And in fact, it's not even going to get to 2%, because Powell made it clear that when he talks about 2% inflation, he's not talking about the CPI. He's talking about the PCE, the personal consumption expenditure index. He said that that's what we're really targeting for 2%. And if you look at that, the PCE is running maybe about 0.5% below the CPI. And why is it that they want to use the PCE and not the CPI? Because the PCE is much lower than the CPI, because it's even more rigged. It's the least accurate of all the inflation measures that the government uses. It's the one that is the lowest, and that's why it's the Fed's favorite.
Putting some money into gold mining stocks may also be worth considering right now, as these types of stocks offer a way to amplify your returns from the current gold price rally. How do you see the current economic and geopolitical landscape influencing your approach to investing in gold and gold stocks? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.